Okay, welcome everyone. We're going to get right into the stock market technical analysis, looking at these charts and trade ideas. Leave me a thumbs up, guys, if you find some value along the way in the content that I'm providing. Here we go. So triple Qs up today. Again, one key area on the hourly chart I've been watching was this one right there, 374.40. And you can see that's an area of resistance that so far there's no rejection. You know, it's popped above it. It's really, every time it's hit it, they've been popping it above. It's held that level as a support level, and so far today moving higher. So I don't see any real overhead resistance on triple Qs until we get to the all-time highs at this point. Again, talked about, I'm not short this thing. I'm not really looking to be short. I don't see any sell signal or indication to be short. So it's looks like it's going to make a new all-time high. And that's about it. Once it gets to all-time highs, we'll start looking for signs of something different. Looking at the SPY here, you can see SPY has had a pretty impulsive rally off of that trend line marked in red right here. And again, that's a key trend line I've been really keying in on for the longer term or the bigger pattern. Here's your 2009 lows on this weekly chart. So every candle here is 1 week. And there's your 2009 lows, and you can see this level has acted as support. Back in 2018, we broke, and it was resistance right there during the COVID drop. There's your resistance, but then they've recovered that, and there you are right there. So we hit that, and during that time when we hit that, I talked about the fact that unless we can break this level, I'm not interested in having a long-term short position, or at least a large short position. Now, again, this level will break at some point in time, but it didn't break here. So you can see they've just bounced off of it pretty impulsively and been rallying higher in the SPY. Going on the daily chart for the SPY, all-time highs right now. So we just have continued all-time highs. We still have negative divergence. That still remains. We just kind of extend it out. So again, it's kind of the nature of what this market does. It basically runs up, makes a slightly new higher high, keeps the negative divergence, and then we get a pullback. Runs up, makes a new high, get a pullback. So right now we are at a divergent high, meaning we have a new higher high in price and a lower high in momentum. Now this is not confirmed, so that's the other piece of the puzzle that I like to wait for, at least to tell me that this negative divergence is going to remain and to start looking for short opportunities. So what you want to see is the RSI and the PPO start to turn down. All right, you want to see it like that. And that would confirm your negative divergence. And then at that point, it makes sense to start looking for short trades. All right, so again, I didn't take the long side of the trade down here. I pointed it out. There was bullish divergence right down in here. And so I talked about that. And that was one of the things that really gave me pause for remaining short. So for the most part, I just got out of my shorts. We caught that correction, got out of the shorts, and I just didn't catch the up move, at least in the indices. I've caught a lot of the up move in the gold stocks recently, but not in these indices. And so you get divergent lows, you rally. You get divergent highs, you sell off. So that's what we're looking for. We're now at the highs. This is not the area you want to be going long necessarily. You want to go long when you're down at divergent lows, down at the low, and go short up at the highs when you get the right signals. Right now, I don't see any signals, so we're going to move on. Okay, this is the big mover for today, Tesla. Some news came out that it doesn't really matter, but they're selling some vehicles for rental cars. But the momentum is really taken off on this thing. So I bailed on this one, the short position this morning. Took a loss. Again, one thing I want to point out is taking a trade and reading the charts is only half the battle. The other half is money management, trade, and now position sizing, not throwing all your money into a single stock or a single trade. That's really key. So no one's going to be right 100% of the time, and it's important that you're not overloading one of your trades because then it only takes one wrong move and it wipes out all your gains on your other trades. So something to note, when you're taking positions, you need to take a position sizing that's relevant to your portfolio size. You don't want to have half your portfolio in any one position or anything like that. Okay, so when losses come in trade ideas, you can exit those and take the loss, and it doesn't just completely wreck you. Again, it gapped up this morning. I noticed it was gapping up and didn't really look like it was going to sell off, so I just exited that trade right there because I don't want to ride this thing if the momentum's going to spike. One thing to notice, though, on Tesla, you do have a trend line. You've got a couple reactions on this trend line. It really comes off of here, the September timeframe. You've held support there, held support right through there. There's another tag of it, and there's the break right there, and you can see where we're trading up to. It's a back test, essentially. Now, we haven't tagged that trend line, so we could potentially go a little bit higher and tag it, or maybe the sellers are going to step in right there. The other thing I don't necessarily like, though, when I look at my RSI down here, you'll see the momentum. We're making a new high in price, and we've made a new high right there in the RSI from that previous high. So you don't have negative divergence anymore in the RSI. It burned through that negative divergence. It is still there in the PPO, but the PPO is pointed straight up. So any higher, and we're going to burn through that as well. So I don't like the fact that you just burn through that RSI negative divergence. That's pretty bullish in general. So not a trade I want to be short anymore on this one for right now. So we're going to just exit that one. Again, it's not a trade I'd want to be long either, especially right here. But if you were long, congratulations on that winner. Okay, some of the ones that have been working, at least to the long side, gold. So here's gold bullion. All the miners are up today, and they continue to look very strong. So again, if you're, I still think that we're heading for the next leg higher in an ongoing bull market in gold. We've had a very sizable correction in the miners. And usually when you have sizable corrections within a bull market, and we see the signs that we see now, that's usually the beginning of the next leg higher. So here's gold bullion breaking above that 1790 area. Again, nice breakout today. So it looks like we're going to hold, which tells me that we're likely heading up to 1833. That's the next level of resistance. You can see 1, 2, 3 tags of that. So I'm looking for, at a minimum, a move up there at this point. And then, we need to break that to really start that next leg higher. So until we see that break, we can't say for sure that we've started that next leg higher in gold. But I think it's very probable now that we're going to at least head up there and test it again. And here's the miners GDX. You can see we're up another 2% so far today. We'll see how this closes out the day. But this was former resistance right there at about 33.50. You can see we tagged it once, twice, tried to break above it, and we failed. And today we're above it, but day's not over. We still have an hour, so we'll see how we close out the day. And another long trade idea, Clorox, again, continues to look constructive. You can see that we're basically on this hourly chart just walking down this short-term trend line here. And we're starting to break above it. It's not super impulsive, so I can't consider that a full breakout yet. I really need to see some impulsive buying. But if you go to the daily chart, it's a very bullish setup. You've got bullish divergence here on the PPO, bullish divergence here on the RSI, and prices continue to kind of drift lower. So looking for some sort of a breakout buy signal, a bullish engulfing candle or something like that to indicate that we have a buy trigger and we're starting the next move higher. Minimum target on this one would be at least a gap fill right here at 178.88. And that would be a percentage move from where we're at of about 10, I think it's about 10-11% before we probably find any sort of real resistance. So waiting for that. We do have earnings coming up here shortly, so maybe that'll be the catalyst. But until we see that buy signal, just keep a watch on it. Looks like it wants to break to the upside. Okay, so oil, this is oil futures CL, continues just this relentless bid to the upside. So again, as oil goes higher, I think that's one reason why Tesla was rallying is it's kind of they're competing energy sources. So as oil gets more expensive, then the alternative energies, I believe, are cheaper or provide a bigger value prop. And that got me thinking here as crude's going higher. I looked over at some of these coal stocks. I want to point out BTU, which is Peabody Energy. You would think that coal would be in more desire as oil becomes more expensive because they're competing energy sources. But one thing I'm noticing here is off the November 2020 timeframe, you have this uptrend line right here. And we started to put in negative divergence. Clearly, you know, basically right there is where we started it on the PPO, and there it is on the RSI. So we're trending down in momentum on both momentum indicators while prices continue to move higher. So there's a last divergent high right there. And we have a sell signal. We actually got it the other day. We got it back here on the November or October 20th. So that is a sell signal, and I do think we're actually heading lower on that. So there's a potential short trade idea, shorting this coal mining stock BTU. I would look at, I've had some levels marked out. Basically here is likely going to be your first level of support, about 874. And that, from where we're at, might not look like a lot, but that's a drop of about 37%. This thing can run, so obviously I think it's important to probably taper down your position size. You don't need a huge position in this one. It's a lot more volatile. So again, position sizing is important. If you guys are familiar with, if you're unfamiliar with any of these concepts or you want to learn more about technical analysis, check out my stock market technical analysis course. Link in the description below. And I will catch you guys on the next video.